And I go, that's what black swans are. They come out of left field and people don't really appreciate them until it's too late.
Welcome to Shadow of Truth with your host, Dave Kranzler from InvestmentResearchDynamics.com and Rory Hall from thedailycoin.org. And today is Wednesday, August the 12th, 2015. And we have a very special returning guest, Mr. John Embry from Sprott Asset Management. And John was so excited to be on the call that he just jumped right in as soon as we picked up the line. So we're going to join the conversation as it unfolded. So thank you all very much for being here today.
And finally, a little reality seems to have been triggered by this Chinese yuan development evaluation.
It sure seems that way. And I don't know if you know the guys over at First Mining Finance Corporation.
No, I don't think I do.
But it's a new offshoot from Keith Neumeyer.
He's a good man. I know Keith.
First Majestic Silver.
Yep.
I spoke with Patrick Donnelly, who's the president over there, yesterday.
Okay.
And they have a very interesting new business model that they're rolling out. And they're going in and buying these distressed juniors and
I think their timing could be almost perfect, actually.
Yep.
Seeing more and more people who, just dumping on, there's no future for mining. It's an antiquated business. I actually find it funny that people have gotten this negative when the stocks have never been that cheap. And the fact is, price sort of corrects a lot of problems. And if the gold price were $2,500 instead of $1,100, these stocks would be the hottest things on the market. So I
don't even think it'll take a move to 2,500.
No, I was just being upset. I think if it went to 2,500, I own stocks that'll be earning more than they're trading for today.
Yeah, and that what they're doing, what he was saying is that they're buying companies that currently where they're getting silver at less than $10 an ounce that's in the ground.
Yeah, no, it's amazing. I noticed, I think the true acknowledgement of how stupid the silver price was when First Majestic came out with their second quarter earnings the other day and had a loss. These guys are pretty efficient miners. And if they're losing money, the industry at these prices is in deep trouble and it can't stay here because most silver gets consumed. I find the whole thing bizarre, and I still haven't figured out where they're getting the silver from.
And I am so glad that you said that because that was one of the questions that I wanted to ask you because in light of what we have already learned is that China and India have these massive solar programs going on.
Yep,
and they're
correct.
Sucking up, silver ore, so they're taking it directly from the mines. They use all of their internal silver. We believe that they're using the internal silver, about 90% of it, for China for their solar program, and whatever they're bringing in from the market, they're using for their investment and other and manufacturing program. With all the mines currently in distress and they're closing and they're either slowing down or just not producing, where is the silver going to come from? Because
if I had to guess, I think that's going to lead to an explosion in the price. But I have to think at some point in the past that J.P. Morgan's fine hand was in there, and I'd love to know how they did it.
I don't know why everyone overlooks SLV. I think that's where the silver's
coming from. I think that's true too, Dave. They've been tapping GLD and SLV whenever they sort of get any kind of a tight situation. But that has a certain shelf life, and it can't continue forever.
Right. That's and the thing is that China has a program that we know that they have stated will run between about 2013, 2014, all the way to 2020. Okay.
Yep.
So we've got another 4.5 years to go on that program. SLV is not going to be able to supply silver for the next 4.5 years.
Not a chance.
Not a chance.
I think we're looking at, but maybe I'm just optimistic, but I think we're looking at some very interesting action come this fall because it seems a lot of things are coming together.
We may be seeing the action starting a little early, John. I
Well,
mean,
it's funny. I said to a guy yesterday, I said, maybe this Chinese devaluation is the black swan I've been waiting for, because it sort of came out a bit out of left field. And naturally, this guy is so beaten down, he just sort of rejected that suggestion. But so far, it's had an impact on
honestly,
everything.
John, I mean, I've been writing a blog post on this Juan situation, and literally one of the paragraphs starts off, "This could be the black swan everyone has been straining to see."
Well, I think you and I think a bit alike then.
I mean, this is something that no one saw coming.
Well, you think about it. I made the comment to Bill Murphy, I guess, yesterday, this morning, that here's a country that had probably the biggest trade surplus in the world, even though it's sort of shrinking, but it's still a trade surplus. They have accumulated still an enormous number of U.S. treasuries, and they arguably probably have the largest gold, even though they won't admit it, gold reserves in the world. And they're devaluing their currency? Interesting. I mean, this could lead to sort of a series of competitive devaluations.
It's funny that you mentioned that, because in 2 paragraphs later, I talk about, the fact that China has a cushion that the U.S. doesn't have. I mean, China has $3.6 trillion in foreign currency reserves that just went up in value for them from their perspective. They've got God knows how much gold. We know it's a lot more than what they've disclosed.
Oh, that the lowball number they threw out was a real, they're duplicitous, those guys. Oh,
exactly.
God.
And they've got a massive manufacturing base, something the U.S. doesn't really have.
Well, it's interesting. My friend Bill Holter has been writing on the subject, and he said, he sort of compares the U.S. and Great Britain when we went into the Depression in the 30s. And it sort of calls like China and the U.S. this time, except China's the U.S. of going into the 30s, and the U.S. is Britain. And it's actually an interesting theory, because let's say the whole thing does melt down. Well, what China has is a totally modern manufacturing complex. They've overbuilt their real estate and what have you, but they've got all this money and all this gold. They're the ones that are going to come out the other side after the reset in infinitely better shape than we are.
Well, and the other part of it is, Dave and I were talking earlier, is that they don't have all of or not that we're aware of, that they don't have all of these unfunded liabilities that the United States has.
Well, no, they don't. I think that they do have an impaired banking system, because I think a lot of the debt in there that's financed this uneconomic building of cities that nobody lives in has probably created a problem. But it's probably a problem they can handle, because they've got enough reserves and what have you.
Well, I agree with that. And I was getting into a discussion with someone via email, and he's like, well, China's got all these issues. And I said, well, let's compare it to the same issues in the U.S. Is it really worse than the U.S.? And he said, well, China has a $15 trillion shadow banking system. And I said, well, how big is the U.S.'s? And I looked it up, and it's estimated to be $24 trillion.
I know.
So
and I mean, the other thing is that the U.S., I was looking at this chart of, I guess federal funded debt in the world. And I mean, the U.S. and Japan and Canada have 52% of the federal funded debt in the world. And they've got 7% of the world population. There's a lot of really unbalanced things in the world.
That's a good word, unbalanced. And yeah, I mean, the scale of China's issues may be large, but, compared to the relative scale of the same issues in the U.S., and then if you throw in Japan, Canada, I mean, it's like you say, it's completely unbalanced.
Totally. And the thing is that I think to date, people haven't seemed to grasp the idea that owning assets that don't have counterparty risk in a mess like this is probably a pretty good idea. I find it amazing that more people can't figure that out.
Well, and that brings me to another question there, John. I'm sure that you guys at Sprott are experiencing much higher volume in sales, and probably a lot of new customers. There was an article published not too long ago. It was last week, I believe, from Money Metals Exchange. And they are apparently one of the largest bullion dealers in the country. And they had well north of a 350% increase in new customers just in about a 3 or 4 week period right after the Mint shut down the American Silver Eagle program when they sold out. Their sales exploded, not just in silver, but in gold as well.
Well, that's interesting because I get memoed on certain things around here that people I know that are dealing with this. And a very clever guy I know, I got a memo saying that he just bought for his wife's account through Sprott Money $1.1 million worth of gold coins. And I thought, geez, Brian, I'm impressed by that, actually. So, yeah, I think there is a segment of society, and albeit an extraordinarily small segment of society at this point, that gets it. And that's what sort of explains these sharp up moves in the amount of gold that's being offloaded.
There seems to be a lot moving.
Yep. And I mean, the other thing is, I think there still is, in the West anyways, limited amounts eventually. And I still believe that this thing will be decided by the physical market, and the paper guys will be overwhelmed by the physical market, but it hasn't happened yet.
I sure hope it comes soon.
We all do. We all do. The degree of frustration in this in this sector, and I know so many people in it that are just almost paranoid or so depressed. It's remarkable.
I completely agree with the physical versus paper theory, and I'm wondering if we're starting to see the signs of that now. I mean, you had the Mint suspending production, you have the Royal Canadian Mint stopping production of their 10-ounce bars, and I heard, and I don't remember who had the report. It might have been Silver Doctors, that the Royal Canadian Mint's now it's put silver maple leafs on allocation.
Yeah, I think that's correct. Like I bought some stuff from them in the past, and yeah, I believe that is correct.
And we're seeing on a percentage basis, we're seeing the highest premiums for silver eagles and silver maple leafs that we've seen since 2008.
Yep, and that's a good sign, because that's where it took off the last time. And I guess, to me, I've had the opinion now for some time, and I discuss it with Bill Murphy a lot. I said, I think we're going to be stuck in this no man's land, whereby they can control the prices of gold and silver probably longer than we can sort of imagine. But there's no middle ground left. When this thing finally explodes, it's not going to go up like $50 or $100 gold. It's going to go up massively, because the whole Ponzi scheme will be revealed, which this paper game is.
I would agree with that wholeheartedly. And let me ask you this, John, and Dave, you can weigh in as well. Please do. China is about to unleash their pricing mechanism for at least gold. I mean, that's coming up within the next few weeks, right?
Yep.
So, I mean, do you think that what's happening right now, do you think that some of the action that's going on now is gearing up for that? Or how do you see that impacting, the late fall and into winter?
Well, I don't know that might be one catalyst. I do think what's going on right now is a reaction to the surprise devaluation of the Chinese yuan. That to me is a signal event, because basically it's going to lead to currency debasement everywhere. If they're going to try to take the yuan down, I mean, that's going to expose everybody else. And what could be a better advertisement for gold and silver than that development?
I'll take whatever we can get.
Well, that's another point that you don't hear the U.S. financial talking heads talk about, is the fact that this is going to stimulate even more gold buying by the public in China. And I have to believe
that's correct.
China didn't devalue their yuan without thinking carefully about all of the related effects of what would happen. And we know that they've had a program in place to incentivize their population to load up on gold and silver since, I think, 2010.
That's correct.
And this is really, an economic cattle prod to get them to buy even more.
It is. I mean, if you're basically we're holding the yuan, I mean, it's just as you say, guys. The paper's being devalued, and nobody knows about paper devaluation more than the Chinese. They invented paper money.
That's true.
Do you think, John, that we're going to see more currency devaluations from the Chinese over the next few weeks or a few months?
Well, it's interesting because they devalued, I guess, a second time overnight to some degree, and then I guess maybe the traders were piling in behind. Then they started to support their currency. I don't know. I mean, basically, I can't imagine the Americans are, all that pleased by this, because I think the U.S. dollar strength has been impacting the U.S. economy, and it isn't justified, really. I think the U.S. dollar is overvalued and overowned. So I don't know. I mean, I think this is one of these events that was unexpected and may have more ramifications than people have figured out yet.
That brings up a really good point, and it's another. I mean, let's look at it this way. China put a lot more planning and forethought into this move than is being put into analyzing this move by the West, at least by the Western analysts.
I agree with that.
And as you say, I mean, this essentially is going to the degree that there's still global economic demand, and we know global economic demand is a shrinking pie right now.
Yes, it is.
And this is going to reinforce or make China's exports more competitive. And the U.S. has already hurt itself by pushing its dollar as high as it's pushed it. It's already hurt its exports. This is going to hurt it even more. But also, I looked at this last night. I looked at the global interest rates by country. And except for the countries with negative rates, plus Japan, the U.S. has the lowest interest rates in the world, especially of any major industrialized country. So if the U.S. wants to try and counter this move by cutting interest rates instead of raising interest rates, it can only go a quarter of a basis point before it takes it below zero. I mean, China's official banking interest rate is 5%. I mean, they've got a lot of dry gunpowder there to continue devaluing by just simply lowering their rates. I mean, the U.S. is basically painted itself into a corner here.
Well, I totally agree with you, and I think the U.S. authorities have a real problem because, A, they don't want the currency too strong, but if it starts to weaken noticeably, I think because it's so over-owned, and it really isn't, given if you look at the financial situation behind the U.S. dollar, I mean, it really isn't. It could lead to a sort of a cascading waterfall of selling. So, I mean, they're trapped in the middle, and I think they're trying to deal with it now by moral suasion, talking about raising rates and never doing anything. But I'm glad it's their problem because I don't know what I'd do if I were in their shoes.
Well, honestly, John, it's all of our problems when you think about it. If you really want to go to the dark side, which you and I have done in emails in terms of where this could really go.
Well, I think that brings up a fascinating point, Dave. And one of the things that has bothered me a lot is the cognitive dissonance amongst not the public. I mean, the public doesn't have a chance. They're being lied to constantly by the mainstream media. But what I find distressing is the cognitive dissonance amongst financial professionals. I mean, the idea that some people think this is kind of like a normal cycle and we're going to sort of come out of it as we have every time in the post-war world, I think that is totally wrong. We have never, ever seen anything this extreme. And to me, we're facing one of two outcomes, ultimately, if you believe in Austrian economics to the extent I do. We're either going to keep pumping dough in there and create a global hyperinflation, or if they embrace austerity, we're going to have a collapse that's going to make the 30s look like a picnic. It's a very tough situation, and nobody seems to realize it.
I agree with that, and we do have one test of history on that in terms of the money printing, and the money printing eventually fails.
Without question.
And that would be what happened in Weimar Germany.
That's correct. I mean, I've read all the books on that, and it's horrifying. And I don't think most people, quite frankly, today pay much attention to history. They live in the present, and they think, our generation is, that's the only thing that counts. And I think they're going to be sadly disappointed when reality overtakes them.
I think it's going to wash over them before they know what hit them.
Well, that's, I'm just writing something for Investors Digest today, and I was trying to point out to somebody with a conventional portfolio, which has done relatively well in the past few years, I think is an enormous risk, and 98% of people don't realize that.
I liked the way that you put this. We were exchanging emails about a week and a half ago, and you said at this point, I doubt the market cap of the world's gold stocks would be as large, and that's when you're looking at the collective market cap of
those startups.
Of the private equity startups,
think about that.
Billion, on top of $4 billion in revenue. And you said at this point, I doubt the market cap of the world's gold stocks would be as large. Which you're right; it's probably under $100 billion at this point.
Well, I've never seen anything like this gold stock takedown that began about 2 months or so ago. And it looked like the Huey was trying to take a 180 to the upside, and that looked like it was going to be the floor. And then lo and behold, they belted it for over 40%. And the stocks were not overvalued then. I mean, this has been a real undertaking. And, people are forced sellers, funds that basically are dedicated gold funds. I mean, people are redeeming them because the thing's performing so badly. But I think something else got the downdraft going. And to me, it's led to an undervaluation of historic dimensions, and everybody hates them, which to me is the best opportunity I've ever seen in the sector.
I agree. And in terms of that downdraft, I have to believe that a major part of it was the hedge funds and their computer programs just selling into the downward momentum. I mean,
without question, the algorithms were just pounding it. And I don't know. To me, I look at some of these companies, and now I'm biased because I think the gold and silver prices are going to move, up to dramatically. But that's going to be the arbiter of whether these stocks are going to be popular again. I mean, if prices go up, they're going to be the most popular thing anybody ever saw.
I agree with that, except if the second part of that comment that you made to me is when the balloon goes up on this mess, shortly, in my opinion, we're going to wish we were on another planet.
Well, the other thing, I think there's a massive trade in the gold and silver stocks, but if my worst vision were realized in the future, and basically, and the gold and silver companies were making all sorts of money, you can bet the governments would come after them with excess profit taxes, etc. But that's something to worry about down the road, not at this point.
I agree with you, and that's always been, one of the fears I've had ever since getting into this sector back in 2001. And I've always known that it's been a risk. I mean, the analysts refer to it as, political risk of various jurisdictions. And even back then, some people had been saying, well, the U.S. is known to be a low-risk jurisdiction, but if you really analyze this out, play the tape forward, the U.S. is a lot higher of a political risk jurisdiction than people realize.
I would agree with that. And but you see, I have a very simple philosophy. Gold and silver bullion in your possession is the core. And the stocks are basically the trading vehicles. And they swing around the gold and silver. And now they've swung to such a level, it's a phenomenal trading opportunity. But you don't get married to them. It's an opportunity to make a lot of money that you can take the proceeds and put it back into the real stuff, gold and silver bullion.
That's exactly right. I agree with you. And I think I mentioned if I wasn't already fully invested in this sector, any cash that I had, I'd be taking 80% in buying physical and the 20% in buying junior mining stocks.
Yep. So now as I said, I've never seen negative sentiment to this degree. And when you consider that, I think Rick Rule had this phenomenal statistic that he came up with that at the peak in 1980, gold and silver shares constituted 8% of the financial assets in the United States or something like that. Now, if you do the same calculation today, it's down to 0.33%, which is 1/24th of the peak. So, this is extreme. That's all you can say.
So if we just got back to 1%.
You got a triple right there. If you get back to 1.5, which he said was the median in the interim over that period, you got a 5-bag in the sector. Everything always overshoots. So basically, that's just jacks for openers.
Is that realistic though? Do you
Sure.
think that?
It's extremely realistic. I think ultimately go a lot higher than 1.5%. I think it got as high as 2% before they took a wrecking ball to the sector.
Everything overshoots, and this thing is grossly overshot to the downside. And I would fully expect, because I think we're going to have chaos in the financial system, that it will overshoot to the upside. So I just think, you don't have to have your whole, portfolio invested in this. I mean, if you got 20%, which is more than 99.9% of people do have, it'll save you in what could be a very, very difficult period.
I agree with you, but I think, you're just going to put 20% in if you're looking for a catastrophe insurance policy. I mean, quite frankly, if you're going to go in, you may as well go in for the majority, because you're going in because you don't trust paper assets.
Well, at this point, I totally agree with you, Dave. I guess the reason I was being a little conservative, shall we say, is I've seen the guys that went all in a while ago, and they're the ones that are just getting killed now, and some of them are are forced sellers. But at this level, I don't think there's much risk at all.
So even if just the forced sellers were to come back in, there would be a massive movement to the upside. There would be a massive
move. But who's going to, you talk to Jim Sinclair, the guys that made the most money in the 70s were the bad guys. I mean, all the momentum guys pour in behind them. So I just think that once this thing reverses, it will reverse violently. And I think people have to be there. And the fact that very few people are just makes me more convinced of my point of view.
And
this violent reaction, do you think maybe we were starting to see that, and maybe it was triggered by last Friday when everyone and their mother was expecting the precious metals to get hit again on that employment number, and instead we had a big move higher.
Even Dennis Gertman noticed that. I think there has been, given sort of the depth of the negative thought as recently as the end of last week, I think there has been a noticeable change developing. But I would say at the same time that the usual suspects are in there every single moment of the day, sort of resisting the move. Like, I think if the market were not interfered with, it could have gone up gold $100 yesterday in that yuan devaluation, because I think it was that significant. But it's being interfered with.
Yeah, well, absolutely. They're in there interfering with it all the time, constantly.
That's why, to me, I won't sort of say we're totally out of the woods until gold moves $100 or $200 in a day, and we'll know that at that point they've been overwhelmed. Hasn't happened yet.
As Jim Sinclair described it, it'll feel like there'll be days when it feels like your hair's on fire.
That is absolutely right. And Jim Sinclair, believe it or not, and I are exactly the same age. We were born in March of 41. So maybe it's old guys in the same era agree on everything.
Whatever it is, I like it. I think that it shows your depth of knowledge.
Well, there's an element of that, We have seen it all. Like most of the people that are in the markets today, all they know is sort of from the 80s on. And from the 80s on, when it was the beginning of what I call the financial asset inflation era. And it's just continued to sort of grow ever greater bubbles. And people think that's normal. This is not normal. This is one of the most abnormal periods in market history. And it's going to end, in my opinion, horribly. But until it does, nobody's going to believe me.
Rory, I think that's probably a pretty good spot to wrap this up. What do you think?
I would agree. We really appreciate all your time today.
Oh, no, my pleasure. Anytime. Seriously, guys.
Well, we're going to take you up on that, John. We're going to get you back on the line here before too long.
Okay, great. And Dave will be communicating on more important things as the days go on.
Absolutely.
All right. Well, we'll talk again soon, guys. As I said, I really enjoyed it.
Sounds great. We'll speak to you soon, John.
Take care.
All right. Bye-bye.